Hi, I'm Lindsay Biscaya. Welcome to Market Call. Brendan Caldwell is on the show today. He is president and CEO of Caldwell Investment Management, and we'll be taking your questions on North American large caps. And you can call us toll free. The number is on the screen, 1-855-326-6266, or you can send us an email to marketcall@bnnbloomberg.ca. It's good to have you in studio. Thanks for coming in.
It's good to be out here in
Scarborough,
in beautiful Scarborough. It's been what a great way to end the year.
Thanks for making the trek. Yeah, last day of the year, last day of 2025. As we look ahead and look at where the markets are, how they're looking and how they're sitting as we head into the new year, what do you think? You seeing some strength?
Well, it's madness, Lindsay. I mean, it's not just the last day of the year and the last day of the half decade, but it's the last day of the first quarter century of this century, of the 21st century.
I never thought of it like that.
And the year and the century began much the same way, with like catastrophes. And we've seen this last 25 years, we've seen wars, we've seen invasions, terrorism at an unprecedented scale, at least in North America. We've seen global pandemics. We've seen Donald Trump elected twice as president. This year began with the world deciding all of a sudden it genuinely did hate America, including Canada. We just had some little bit of resentment. But if you thought about all that's happened the last quarter century or the last year, you'd think there is no way that the stock markets are going to do well. And yet here we are with a strong U.S. market and even stronger Canadian market, which is one of the rare years where I think we've almost doubled up the U.S. in terms of performance. So looking ahead to 2026. I think the lesson of the last 25 years and the last year is the same. Politics are interesting to talk about, but long-term, they don't have the impact on markets that interest rates do. Should interest rates continue to come lower, then I think stock markets will continue to rise. Okay, so then at least for U.S. markets in the new year, it looks as though interest rates are going to go down even more. So expecting more growth there, I guess, in 2026, if that happens? Probably. The market, it's funny that, of the 10 or 11 sectors, only 3 outperformed the market as a whole, both in Canada and the U.S. In the U.S., it's communications, technology, financials, I think. Here in Canada, I think maybe only be 2 sectors. I think it was financials and materials. Mostly that is the gold producers. They just did so well, they dragged the whole index up with it. So what we're hoping to see is a bit of a broadening out, that it's not just 1 or 2 sectors driving everything, and interest rates really will be the determining factor of that. Do you think you can kind of see which sectors might broaden out beyond those few that you mentioned, or have a? I know it's a guess. Well, it is a bit of a guess. I do think that the materials sector and therefore Canada should continue to do well. I think the economy will continue to carry on. I mean, it won't be hurt by lower interest rates, although it's a strange situation where they're lowering rates not so much to boost the economy, but frankly to boost the markets. I mean, I don't think the U.S. president, who will probably appoint a more dovish, more accommodative central bank chairman of the U.S. Federal Reserve come May, I think it is. I think he wants the interest rates lower because that tends to drive markets higher. So we've seen the last 25 years where we've had a very low interest rate policy, but it hasn't really flowed over into the CPI, the Consumer Price Index, going up either in Canada or the U.S. until very recently, the last 2 or 3 years. But now it's affecting that. But what we've really seen is an impact on investable assets, particularly the stock market. Okay, lots to go over, but we're going to take a quick break right now. Brendan Caldwell of Caldwell Investment Management. We'll be back in a moment taking your questions on North American large caps. Stay with us. Welcome back to Market Call. Brendan Caldwell is on the show today answering your questions, and we're going to start with the phone lines. Michael's calling in from Vancouver with a question. Hi, Michael.
Hello, Lindsay. Happy New Year to you and Brendan. Brendan, my question is on BMO, but I'll start with a quick question first. The 5 banks had a great year in 2025. Do you think they'll take a pause here? And secondly, if they don't pause, do you think BMO might lead the field, since they were the laggard of the 5 in 2025? I'll hang up, listen to your response. Have yourselves a great day and a Happy New Year.
Okay, thank you. Happy New Year. So
Happy New Year, Michael.
first part of that, what do you think?
Yeah,
the
so
banks
the
are gonna
double-barreled
continue?
question is the banks in general and BMO in specific. Who's going to win? Well, our actual bet is that Royal Bank will probably be the best performing. They are the 800-pound gorilla. Of the smaller big banks, if that's a thing, they tend to take turns in doing well. I think it was 2 years ago, BMO outperformed everyone, and it's not surprising, I guess, they lagged this year. But Royal Bank is the 800-pound gorilla in the sector. If there's the big banks, and then there's Royal Bank, which is in a league really all on its own in terms of influence. I mean, the Canadian Bankers Association is the single most effective lobby in Canada. I mean, lobbying is a thing in the U.S. It's a whole industry. It's to a lesser extent here in Canada because you really don't have to influence as many people, really just the PMO, Prime Minister's office. But the Canadian Bankers Association, and that is really dominated by the Royal Bank. So consistently, Royal Bank has been the outperformer. But yes, you could see one of the others. I was actually surprised the TD did as well as it did, considering, well, money laundering. They had a bit of a tough 2024 as they go. So
Bit of an obstacle, yeah.
I wouldn't have thought, given, I mean, there's constraints in Canada. There's only so much they can grow here. There's only 40-odd million of us, and I think our population actually shrank because we didn't renew a bunch of student visas, because that'll solve everything. Sorry.
That's a whole different conversation.
That's a whole different conversation.
Yeah.
But, so our population, there's only so much that they can grow in Canada. So the fact that TD can't grow in the U.S. until there's censure by the U.S. government is lifted, which who knows how long that takes. I would probably continue to bet with Royal. That's actually where our money's invested. But some of these other banks, I mean, BMO's had a good U.S. Operation, and they could continue to grow. Maybe pick up some of the slack TD's not able to capitalize on.
BMO may be sitting in the middle of all those banks.
They will.
Somewhere in the middle. Okay, we're going to move on now. John's calling in from London with a question. Hi, John. What's your question?
Hello and Happy New Year. Festive attire, both of you. Looks good on the screen. Brendan, asset managers such as KKR like low interest rates. KKR's had two big runs, one in early COVID, one later in COVID. More complacent recently. Is this the year for KKR and asset managers in general? Thanks very much.
Okay, thank you.
Well, thank you, John, and Happy New Year. I do the 12 days of Christmas, just so we're clear. I go right through to Epiphany, and in honor of my North Macedonian Orthodox marketing VP, I celebrate Christmas on the 7th of January. So, KKR. I think we like the asset managers. I mean, we own IA Financial, we own Manulife, we own Sprott here in Canada. The interesting thing about KKR is it's in the private equity sector, which I think the concern in that sector is that maybe the private equity sector, because it's like anything, going back to the Dutch tulip bulb craze from 400 years ago, when everybody's into a thing, it really becomes stretched. So. People, I don't know if they quite gave up on capital markets, but there's an element of that. There's been very few in Canada, almost no new issues of public companies being listed. And I think this is a terrible thing. Again, another conversation. But in the U.S. market, just money's been pouring into the private equity. And there is only so much private equity you can do. Eventually, you have to become public or do something with it. So the question is whether this sector has become overextended, whether there's too much money chasing too few opportunities. Now, that having been said, that all may be priced into specifically the KKR. It's one that we have owned in the past, not at present. It's not one that we're looking at right this moment, but I do like the money managers in general, which was part of your question.
Okay, we're going to move on. Silka is calling in from Toronto with a question. Hi there. What's your question?
Hi. Thank you for taking my call. I have a question regarding Timber Creek. It is in my tax-free account, and it doesn't look very healthy. I have a loss from close to 9%. The dividend is 9.97, and the research from RBC Research says to hold and to buy. And I don't know what to do because I really, really, really like to make some money on this.
Okay. Yeah, that was a one-year chart right there.
And a 5-year chart. So,
and a 5-year chart we're looking at now.
Yeah, it is a funny thing that, I mean, this is when I talk about the Canadian Bankers Association being the dominant player. This industry in this country is really dominated. I mean, there used to be 4 pillars. There was banking, insurance, trusts, and brokerage. Now the banks really dominate all 4 sectors. Now, I think there are opportunities, which is why we own some non-bank financials like Sprott or like Manulife. Or even IA Financial. So there are some opportunities to take advantage. But I think for 5 years, Timber Creek has gone down and down and down. It's not one that I follow very closely. Yes, at some point it will have a turnaround, probably. But things do not. It's not going to go straight up from here. If you wanted to get it off your portfolio and look at some stocks that maybe, I mean, unless you're dealing with Timber Creek directly, and you know the company and you really like it and you really believe in what they're doing, maybe buy shares in whatever financial services industry, in financial services company you actually do use. Because if you like them, maybe other people will as well. So I would suggest, I mean, don't take my advice, that for those owning Timber Creek, it'll probably be a while before that turns around.
Silke was mentioning too that yield, it's more than 10%. Is that something that's important to you?
Good point. I mean, yields of 5 or 6, they're great, probably. Yeah. Yields of 9 or 10, the market's telling you that dividend is likely to be cut. I mean, Bell, even BCE, the parent company of this organization, to get this reorganized, they did need to cut the dividend. So it's just, when it's getting up to 9, 10, look at it this way. Try and find a financial services company that you like that has a history of growing its dividend, because you're likely to do better on a stock with a growing dividend than on one that cuts the dividend. They may get it all sorted out if as and when there's a dividend cut. But a growing dividend, the stock almost always outperforms those that are cutting.
Okay, and I don't know if I need to do this, but just a disclosure, Bell is the parent company of BNN Bloomberg. So we're going to take a quick break, and we'll be back with Brendan Caldwell of Caldwell Investment Management in just a moment. Stay with us. Welcome back to Market Call. Brendan Caldwell is on the show today answering your questions, and we're going to go straight to the phone lines. Bill is calling in from Bowmanville with a question. Hi, Bill. What's your question?
Thank you, and Happy New Year. Brendan, I bought Comfort Systems a while back at your recommendation, and I did well on it. I would like to get your thoughts on how it may do in 2026. Thank you.
Okay. Thank you very much. Happy New Year to you as well.
Thank you, Bill. Happy New Year. It makes me incredibly nervous that anybody buys stocks off of what we talk about, because from 3 months to 6 months to a year, we may have sold it, things may have changed. So just caveat emptor, don't listen to anybody that you hear on television, especially
We have those disclaimers. It's okay.
There you go. But yeah, we still own Comfort Systems. We still like it. Got hammered. That's the technical investment term. When it's not DeepSeek to the AI market in the United States, because Comfort Systems makes air conditioning units. I said, what the heck does that have to do with AI?
Yeah.
Well, all the cooling that gets bought isn't to keep you and I cool, Lindsay. It's to cool the computers.
Yeah. All the equipment.
It's being done. The comfort isn't ours. The comfort is for the comfort of the computers. If you think the singularity hasn't happened, you're mistaken. We're now making machines just to keep the computers comfortable, and that's where the industry is. So what we have done is we just continue to invest in the companies that make money, regardless of who wins the AI race. I don't know if Meta or Amazon or any of these other companies are going to be the AI champion, or Google or whoever, but they're going to need servers cooled. So Comfort Systems is one of the stocks we own in that sector.
Interesting. All right. Elliot is calling in now from Hamilton with a question. Hi, Elliot.
Good afternoon. Please, I regret not buying it down at 190. TKO Group now at 215. Is it fully valued, or can it punch its way to greater profits? Thank you.
Okay,
nice way to ask that. So TKO, Technical Knockout, is the parent company of what was in my youth WWF, the World Wrestling Federation, now World Wrestling Entertainment, and MMA, the Mixed Martial Arts. No longer controlled by Vince McMahon. We actually own it, and it is one of the fastest growing sports, both domestically but also internationally. I mean, it's what was there was a great movie out with Tatum Channing, I think, the Iron Claw, about what wrestling was like in the 70s and 80s. This little Midwestern, Southern entertainment / sport. It's now gone very global, as has MMA, which is, I think, the real deal. Anyhow, we own it. We just think the opportunity for international expansion of sport. I think before this program on, and you did a segment on women's sports. Yes. Not a lot of ways to buy into public sports. The Maple Leafs used to be a public company. I mean, you can buy Rogers, but it's now part of a much bigger conglomerate.
So then what does that mean for the...
I trash BC and then I endorse Rogers. What kind of guest? You're never having me back, nor should you. It's very inconsiderate on my part.
Okay.
I'm sorry.
But we do have a lot of Leafs fans, I'm sure, watching. Well, some Leafs fans maybe. But I mean, the future of sports and entertainment groups that kind of are owning sports or sports channels or what does the future look like? Like a TKO Group?
It's big.
Because if you look at the one-year chart for TKO Group, just like Elliot was saying, they've done well this year.
It's big. We still own it. The only thing, and this is, I've told Ed Rogers this, and I'll tell anybody that listens, gambling in sports will be its comeuppance. At some, the ads are, and this is where all the money is in the gambling advertisements. It used to be anathema to sport because they didn't want to wreck the outcomes. Outcomes will get wrecked. At some point, there's going to be something that makes the Black Sox scandal of 1917, which is why gambling and baseball have had such a bad history for 100-odd years. There's going to be a problem. So I'm saying that out loud for anybody who cares to listen. But yes, we like TKO. We like sports. We do own TKO.
Okay, got it. Frank is calling in now from Toronto with a question. Hi, Frank.
Hi, Lindsay. Hi, Brendan. Happy New Year. I was asking about the TC Energy. Where does he see natural gas, and where does he see oil in the next 12 months? Is TC Energy? I own it. Do you think it's going to keep going higher? And I'll hang up. Thank you. Bye.
Okay, thanks, Frank.
Thank you,
TC
Frank.
Energy, oil in the new year.
Yeah. So what used to be TransCanada Pipelines now TC Energy. Everybody likes to use little acronym things. So they got a good prime minister for them. Maybe not the best prime minister they could have, but a good one who's really working on pipelines as projects. So I'm cautiously optimistic that there will continue to be pipeline expansion. Natural gas, he asked about specifically. We like the natural gas sector. I grant you it's a transition sector. We probably won't be burning as much natural gas in 25 or 50 years, but in terms of the environment, much better than coal. And we've seen that over the last, 20, 30 years. I think half of the U.S. was powered by coal in the 90s, and now it's, I think, 15%. And it's only about 5% here in Canada. So what's taken up most of the slack has been natural gas. And I think it'll be a while, at least in this country, before the sun shines every day. Wind power, maybe there'll be some other things. I think nuclear, which we do have a significant investment in, will be a thing. But I do think that both pipelines and natural gas will continue to be worthwhile. I think that this company probably continues to do well, and I think you've seen a bit of a rebound in the pipeline sector as reflected in TC Energy's chart, which I expect will continue in 2026.
Even with the kind of supply and demand issues and the glut that's expected in 2026 when it comes to oil?
Well, the more they're pumping, the more money they make. They ship as well as produce. So I do think that the economy, again, we talked about it earlier, the lower interest rates should at least keep the economy at the same level. But perhaps even expansive with, and I just, with currencies continuing to be under pressure, I do see the price of all commodities, including energy, in fiat dollar and US dollar terms continuing to be fairly strong.
Okay. Dave is calling in now with a question from Cambridge. Hi, Dave. What's your question?
Good morning. Thank you, and Happy New Year. My favorite is gold. I like Agnico Eagle on the high end and Wesdome on the medium-sized end. I'm wondering what the expert thinks. Thank you.
Thank you.
Well, when we find him, we'll ask. But if you meant me, we actually do like Agnico Eagle as well, which frustratingly, I mean, it's done well. They got the chart. They got the chart posted up there. It's done well, but not as well as the rest of the sector. I mean, we've liked it for a bunch of reasons. At the very least, it's largely Canadian. It's got many of its mines are here in Canada, and We do think cautiously optimistically that this is going to be a better environment politically to develop the resource industry. Others that we like, K92 Mining, Kinross, a couple of other positions that we have. So we do continue to like the sector. It's what I was saying a moment ago. What is true about energy and other commodities, I think, is more so true about gold. Gold should have done better sooner. I give a shout out to the late Nick Barisheff, who had BMG, I think was the name of his company, and he wrote a book called $10,000 Gold. And the trouble with waiting around for one thing to do well, you may not live to see it. He's passed away a couple of years ago, but he predicted gold at $10,000 an ounce, which I wouldn't be surprised at. And now it's 4,500 give or take. It seems more likely. But when he wrote that, it was a few $100s an ounce. It's just that up until this point, the cryptocurrencies have taken up the space that gold had as the reserve currency. People thought, we don't need gold anymore, we'll use crypto. Now crypto's having a bit of a pause and the money's flowing into gold, which has been a store of value for thousands of years, and I expect will continue to be so. So we like the sector. I've been a little disappointed about Nico's relative performance compared to the sector, but what did the great philosopher Woody Allen say? 90% of success is just showing up. So just being in the sector has really helped portfolios, including ours.
Okay. All right. We're going to take a quick break right now, but when we return, we'll take a look at some of Brendan's past picks. So that's next. Stay with us. Welcome back to Market Call. Brendan Caldwell is on the show today, and we're going to go through some of his past picks now. So, Brendan, we'll start with, these are from December 30th, 2024, so about a year ago, almost a year exactly. We'll start with Meta Platforms, recommended at $591. Now it's at $662, so 12% return. This one did pretty well.
Well, yes, but like comparatively, like most of the rest of the industry, though, 12%, that seems a nice steady rise. No, it would have, if as and when they show the chart, yeah, it'll have the Grand Canyon there somewhere where it was deep six. So they have 3 billion active users, and my children would fairly say, who are these people? We do not know them. Now, there was nobody better to really opine on the future of social media than a 55-year-old portfolio manager. But even our company, traditional, staid, 45-year-old Canadian company, we're using Meta more to make people aware of what we do. Yeah. So they have 3 billion active users on a monthly basis, and we really do see them as a potential AI winner. And we're putting our money where our mouth is in that this is a company that our company's actually using to get out there in the social media, because the answer to my kid's question, who's using them? Old people. Who needs their money invested? Old people. So so we still like Meta and we still use their products.
I mean, social media is still not going anywhere, right? So
probably not.
Okay, next pick is Argan. This one maybe didn't do as well as Meta, even though I take your point on Meta. Recommended $138.92. Now it's at $350. Oh, sorry, this one did do well. I'm looking at.
Yeah.
Not spoiler alert. This one did well.
Yeah. So natural gas, renewable power, but mostly natural gas. As I said, the U.S. has been shifting from more coal to more gas, and they're going to need power. They're going to need power to power all of these. So whether that's nuclear power, which may be a little bit more cutting edge, until they get to make a transition to more renewable or some other energy, natural gas is still going to be a thing. So this is going to be a way to play it.
Last pick, Interactive Brokers. Recommended at $178.95. Now it's at $64.89. Big sigh from you.
Nothing like doing one of these shows after a great year in the market to make yourself appear bright. No, they are the global leader in discount brokerage. Mm-hmm. So their ads are particularly annoying. They air on this station, and what they do is even if you don't have a subtitle there, they have their own subtitles on their ads just to make sure that even if you have the sound off, you get their message. But Tom Peterfy founded this, I don't know how many decades ago, and he's become the dominant player. We still own it in our U.S. dividend strategy. This is still going to be a much bigger play globally as more and more, as they white label their services for more international brokers who want access to the U.S. market.
Okay, we're going to take another quick break right now, but we will be back with Brendan Caldwell of Caldwell Investment Management taking your questions on North American large caps. We'll be back right after this. Stay with us. Hi there. Welcome back to Market Call. We're going to go straight to the phone lines. Kevin calling in with a question from Ottawa for Brendan Caldwell. Hi, Kevin. What's your question?
Hi, Brendan. Thank you for taking my call. My question's on CNQ. It's been stuck in a really tight trading range, and I'd like to know if you're bullish on oil for 2026 or 2027, and would you be getting in at this price or waiting for a better entry point? Thank you.
Okay, thank you very much. Yeah, we were speaking about oil earlier, but I mean...
Fair enough.
Yeah.
So it's not one of the ones that we own. We do like the sector. We actually have quite a few Canadian energy stocks. On the value side, more Cenovus and Tourmaline. On the more momentum growth side, Athabasca Oil, Spartan Delta, Tamarack, Enerflex. There's a few that we own. We just don't own this particular one. That having been said, it only was up 7%, but I think it pays like a 5% dividend, give or take. So you're turning out 12% a year. I wouldn't be surprised if you got that kind of return next year as well. So it's just not. So I like the sector. It's just not one of the companies that we own because we're on the one hand looking either for deeper value or for a little bit more ability to participate in the upside. So CNQ has been very disciplined. They've been buying back their stock. They've been steadily increasing their dividend. So this is what they used to call a widows and orphans stock. One you just hold to have consistent growth, not too much excitement. Even if I'm wrong about the energy sector, nothing really terrible is likely to happen here for the foreseeable future. They've got a long life asset, but there's some other stocks that we like better.
Okay. Jacob's calling in now with a question. Jacob's calling from Toronto. Hi, Jacob.
Hello, good afternoon to you, and happy holidays, and happy New Year. I'd like to ask the gentleman about Shopify, please. It's been going down lately, and I have a lot of it. I'd like to know if it's to sell it or to keep it. And besides, if he has it in his portfolio. Thank you very much, and have a happy New Year.
Thank you. Happy New Year. Sell or hold? What do you think about Shopify? It's had a year.
We've owned it from time to time in our value momentum fund, but it's always had more on the momentum than the value. So I'm probably the wrong person to ask about Shopify. So I agreed to take the call because you can't do a call on large cap Canadian stocks when you're not prepared to talk about Shopify and the fact that we haven't owned it and should have owned it. Best guess is that the online shopping is not going away, that retailers are not going to need less help getting their products to market, that AI will become a thing. Whether Shopify is the dominant player in that space, I don't know, but I do think this sector is got some more life likely in it. If you're asking, you said you owned a lot and should I sell some? If you've owned a lot and done well, there's no harm in taking a little bit of money off the table. Interesting little thing, and I'll just use this moment here. In Canada, today is actually the first day from a trading perspective of 2026. Anything you sell today for a gain doesn't count as a gain on your tax year this year. Because Canada, for tax purposes, again, not a tax advisor, but this is my understanding, uses settlement date. And so the settlement date for trades today will be Friday. So if you want to sell it today, you would be selling it ahead of Americans who, if they wanted to sell something on which they had big gains, need to actually wait till January the 2nd, because my understanding is that they use trade date for tax purposes. So if you were thinking of selling it ahead of the Americans, today might be a good day, just on Shopify or anything else. Just a thought.
Interesting little thought there. Okay, Mel calling in from Waterloo with a question now. Hi, Mel.
Good afternoon and Happy New Year. Just wondering your opinion on BANK. They just raised their dividend for January 2026, and I'll hang up and listen to your opinion. Thank you.
Okay, thank you very much.
That's a bank ETF. Am I correct in that?
I believe so. Just trying to look for that now.
Yeah, so if I'm correct in that it is in fact a bank ETF,
yeah,
then yes, it will probably do as well as any of the banks. If you say, I don't know whether it's CIBC or BMO or Royal or whatever, TD is going to do well, I just want to own the sector, then yeah, that's absolutely fine. It probably has I don't know the ETF specifically, but I expect it has a relatively low, with these sort of passive ETFs now have a relatively low management expense ratio and MER. So if that is a way of doing it, we would tend to prefer to own what we think is the best bank, which in our opinion is the Royal, year in, year out. It's just been the 800-pound gorilla. It's why it got to this point. So there we are.
PETA's calling in now from Vancouver with a question. Hi, PETA.
Hi, Happy New Year.
Happy New Year.
The fashion model. The ladies and I want to wish you and your dad all the best for the new year. It was good to see your dad on BNN yesterday. Today, I'd like to ask you about Manulife. Thank you very much, Brendan.
Well, thank you, Peter. You've always been so good to me on TV, probably too good, and I will give my father your warmest regards. We own Manulife. We like Manulife. Funnily enough, life insurance companies actually do well in a lower interest rate environment, or as interest rates are descending, because like many of the financial services companies. So, plus they have the financial planning and investment divisions. So, as a non-bank alternative, I think this is one that I think it may be Canada's largest non-bank financial, one that I think will continue to do well. Partly because the interest rates are coming lower, partly because I do think the stock market will continue to do well. They have an awful lot in the way of reserves, and if interest rates come lower and the stock market does well, their reserves are leveraged to that. So I think there's a lot of different ways Manulife can continue to do well, and it's one that we own our value momentum strategy.
All right, we are going to take another quick break right now, but we will be back with Brendan Caldwell of Caldwell Investment Management. He's taking your questions on North American large caps. So we'll be back in a moment. Stay with us. Welcome back to Market Call. Brendan Caldwell joining us in studio today to answer your questions. And we'll start with a question from Noah, who's calling in from Mississauga, Ontario. Hi, Noah.
Hi there. I know you cover mainly Canadian stocks, but I've got a question about this U.S. stock. It yields almost 3%. It's at a 10-year low. And we've seen insider purchases, not sales, from the longest-serving board member, Tim Cook, who heads Apple, and then, of course, their CEO, who just bought $1 million worth of shares yesterday. 10-year low, very low PE compared to its peers. What is your opinion on Nike? Should we just do it?
Good one. Good one. Thanks, Noah.
Nice. You couldn't have asked a better leading question if you worked for investor relations for the company. So yes, those are all good. It's not one that I cover specifically, but it just was an interesting call. I thought I'd take. Look, I'm watching myself on air for the first time. I have to get jogging again. I'll probably buy some Nike shoes. So I think the principle of buying stocks that you own, that you use the products of, I think really makes a great deal of sense. So if you really like Nike shoes and you're out there buying Nike shoes and you think they have a great product, buy them. That's another reason to do it. Yes, eventually these things will turn around. Normally speaking, though, a stock that's been in decline for half a decade usually takes a little bit to bounce back. It usually needs to build a little bit of a base. I'm not calling myself a technical analyst, but if stocks that have a short, sharp drop, yes, can have a short, sharp rebound. But stocks that have been trending down for 5 years tend to base while everybody gets themselves sorted out. But these are certainly good signs that insider buying. And I do like U.S. brands. I think that notwithstanding the feeling toward the U.S. at the present time, there is still an interest in the U.S. There's more investors are able to invest in the U.S. Korea just opened up again to buying U.S. stocks during Korean daylight hours, something that actually suspended for the last year. And Korean trading is unlike any other trading in the world. So I do like this idea that U.S. stocks in general and consumer brands like Nike can continue to do well.
And Nike just had that big partnership with Skims, right? Announced, I believe, in the fall of this year. I don't know whether that's a sign that maybe they're struggling or a refresh as we head into 2026.
Skims are old people's shoes?
Skims is Kim Kardashian's brand.
Oh, okay. No, sorry.
Yes.
I'm thinking something else.
Yeah. Skims is Kim Kardashian's brand.
Between Kim Kardashian and exercise equipment, I'm not sure that I'm your target market, but perhaps the gentleman.
Maybe in the new year.
Maybe in the new year.
For Nike. Okay, we're going to move on. Robert is calling in from Vancouver with a question. Hi, Robert.
Good morning. Thank you for taking my call and Happy New Year. I currently have a position in the ETF HHL, and I'm interested in the outlook for that and the healthcare in general. Thank you.
Okay, thank you.
So our favorite stock in the U.S. in the healthcare sector doesn't itself make anything. It's called McKesson, and they are a drug distributor. And there are a number of they're doing a number of things to try and get not just the Ozempics, more my target market, I guess, but the other drugs of that class out to the people. But where the fastest growing part of the industry is in the really high end drugs that are how does one say, where the U.S. healthcare sector has struggled has been the insurance business. They've taken a bad rap. They've lost a CEO. There's a lot of anger toward that. Mm-hmm. McKesson has done a good job of getting the drugs out to the people. Yes, they've made a lot of money doing it, and they've invested in drug development centers. So they'll be the ones that end up getting the distribution contract when that comes. So the sector has been under a bit of pressure. But this is an area of the healthcare market that we like in the U.S.
Okay. David's calling in now from Brantford, Ontario, I believe, with a question. Hi, David.
Good day to both of you, and having a Happy New Year. My question's on Brookfield Renewable. I'd like to know your guest's opinion on how it's going to go. Thank you.
Okay. Thanks, David. Happy New Year. Brookfield Renewable.
Again, another sector I was quite wrong about it. The 12-month chart seems to show it doing reasonably well, but over a longer period of time, it's been, shall we say, in a trading range, which is actually done better than a lot of the other renewable-based companies. So if you like renewable energy and if you believe that is the future, then Brookfield Renewables probably will be a better play than most. But as you can see, longer term, the stock's fallen in half over the last half decade. It's not the one that we own at present. I had this, I had Algonquin Power, really a big fan. I would have thought that the renewable sector would have done better, but I thought it's just been longer in adoption. But I do think that in the next, this moment will come. I think the second half of the decade for this sector will likely be better than the first half. It could scarcely be worse. Because I do think there is a market. There is a demand for energy that doesn't come out of the ground and, well, is, for want of a better term, renewable. So I do think the sector will have its moment. It may take another year or two to develop, but Brookfields will probably be among the best in this sector.
All right, we're going to go to an email now. This is coming in from Elaine, and it reads, would Mr. Caldwell please share his thoughts on Constellation Software? We get a lot of questions about Constellation Software.
Well, you would. Well, the funny thing is, Constellation Software is classed as a tech company, but it is actually. We've seen this in Canada. Canada's particularly good at this. It's sort of a roll-up, and what do I mean by that? Well, you take a public company with a very high multiple, and you buy a private company using your shares as currency, and the private company may be trading at 5 or 7 times earnings, while your public company. The private company is trading at 5 or 7 times earnings. Your public company is trading at 10 or 15 or 20 or 25 times. So if you're using your stock at 25 times earnings to buy a private company at 5 times earnings, the leverage off that, because every time you buy a company with your stock, you do very well. So whether you're using stock or cash or whatever currency you're using, it's immediately accretive to the bottom line. So those earnings going from private to public, you may have a 5-fold increase, just picking numbers out of the air. And we've seen this in Canada a lot of ways. We've done it with funeral homes, Lowen Group. We did this with school buses, Laidlaw. So that's what Constellation Software has been. It's just there comes a point where you've rolled up all that you can roll up. You can't keep growing at the same rate because it's the same thing we talked about with KKR. They're just not the same private opportunities to go around as there might have been when you began the process. It's true of every industry, including one that you'd think was limitless, like software. So I think Constellation Software may be a while before it recovers, and that's why.
Okay, we're going to take a quick break right now, but when we return, we'll take a look at Brendan's new top picks. That's right after the break. Join us Friday on Market Call. It'll be the new year by then, of course. Dan Rahinton will be on the show. He is portfolio manager at IA Global Asset Management, and we'll be taking your questions on Canadian and global large caps. And Brendan Caldwell joining us in studio today for Market Call. We're going to go through your top picks now while we still have time. So we'll go through them. Is it CACI International? Or?
Yeah, I don't think they pronounce it CACI. I think it's CACI.
Yeah.
I think that's how they actually do it.
That was my first guess. Yeah.
Yes,
what do you like about this one?
Defense, drone technology. It's a government contractor that provides mission-critical tech. Regrettably, this world is not becoming a more peaceful place. Our chairman said people actually don't know how to do war right now because everything is so much in flux. I mean, my bigger concern is people don't know how to do peace.
Yeah.
I was nostalgic as we end this 25 years of the first bit of this century. From 1989 to 2001, I think the Western world thought it was at peace. And then this last 25 years has been schmozzle. And so CICI is a big U.S. government contractor that, among other things, does anti-drone systems. It is cybersecurity. This is really the leading edge of where defense is going. President Trump talked about his Trump battleship. And there's going to have the big aircraft carrier, and the big is simply a big target right now. Everything's got smaller. Everything's got micro. So I'm sure to put on a show, big things will still be useful for that. But in terms of actual defense, a company like CICI that deals with drones, deals with cybersecurity, that's where the warfare is. Governments always prepare for the last war.
Right.
And this is, I think, where the future of defense looks. So.
Defense spending, such a story in 2025, probably a bigger story in 2026.
Yes, well, I mean, Canada is ramping up its defense spending as well. I'm involved with the military, first with the Queen's Own Rifles as they were honorary, and hopefully going forward, working with another regiment in the area. And the defense spending is ramping up because we have to for economic and political reasons and for defense reasons. So we like the sector and this company in specific.
Your next pick is InterDigital. What do they do?
They have patents. They have communications patents. They have like 30,000 of them. Some they've developed, some they've bought. And so really anything to do with 3G, 4G, 5G, 6G, they probably have some patents around that. And so if you are, they have deals with, I think, 80% of the big cell phone manufacturers. I think there's a couple more they need to get sorted out with. They're at present litigating with Disney because they have patents around streaming technology. And I think Disney is the test case around that. Should they be successful in that, then all the other streamers will likely end up paying them a revenue. So they are the developers and purchasers of patents that all the growth is coming in both communications and entertainment. They're at the nexus of it all and have the patents to make it all happen. Okay,
your last pick is eBay. Why are you picking eBay?
eBay, it's in a way kicking it old school. Because they are I bought a lot on eBay when it was new, like 25 years ago, before the social medias and everything. And you would think that, being the second biggest retailer, people would kind of forget about it. But they actually, where their specialty is in specific categories, and they're actually really big in automotive and reselling of of parts, which is like a $10 billion industry.
We didn't really connect eBay with that, actually.
Yeah, well, they did auto parts, fashion, all kinds of refurbished goods. So as AI becomes more of a thing and more targeted for the market, we actually think this could be a big winner. Everybody talks about, is Amazon going to be a thing, but eBay is, I think, a little bit under the radar, so to speak, and I think it'll have a bit of a comeback here. It's already started to do all right, but I think it will have a resurgence as people look for Amazon alternatives.
Oh, okay. So Amazon alternatives, that's kind of the story in the new year. Just in the last 30 seconds, eBay might have a resurgence, especially with the connection to AI that a lot of these, we talked about Shopify earlier, having that connection with AI as well.
Shopify, Meta, even Amazon, which has been seen as an AI laggard, we own a part of the portfolio. So I do think that the bigger players will continue to dominate. We own Microsoft for much the same reasons. These bigger companies have uncharacteristically, the way technology tends to go is, particularly in cell phones, there have been 5 or 7 different leading cell phone manufacturers. But the people behind the scenes, the Microsofts, the Amazons, and even the eBays of the world, we think will continue to prosper, whoever the hardware producers are.
Okay, that's all the time we have, Brendan. So good to see you. Thanks for coming in studio, and Happy New Year.
Thank you, Lindsay. Happy New Year to you, too.
And that's it for Market Call today. Thanks for watching. We'll see you next time.